Hello, everyone. I was having a bit of technical difficulties getting my Facebook Live to work, but it looks like it should be okay now. So this is going to be the first part of a three-part webinar today. I'm expecting that this is going to be about an hour long in total, but I'm breaking it into three parts so that if not the entire thing is applicable to you, then you can just jump to the section that is applicable and watch that. So it's going to be part one, which is where we are now, how to qualify for the CEWS 75% wage subsidy and frequently asked questions. Part two will be how to calculate the CEWS 75% wage subsidy using the CRA spreadsheet. And then part three will be how to apply for CEWS 75% wage subsidy, how to actually fill in the application. So there's three sections. I am running this live from my Decimal Accounting Facebook page, and then I am also trying, hopefully succeeding, to record it through Zoom at the same time, because when I do a Facebook Live, I can't download the video afterwards. So I am trying to record it right now through Zoom so that I can post those sections after the live is finished on both my Decimal Accounting YouTube page and IGTV and other channels as well. So if you come in this partway through, you should be able to watch the recording. In between the three sections, I will take about a 10-minute break in between the live sections to stop my recording and just make sure that everything's working properly, and take a bathroom break and a coffee break, and you can as well. So this is going to be part one. So let me start off with a legal disclaimer, which is that this video is not endorsed by CRA. I don't work for CRA. I am a self-employed accountant, and this is my interpretation of the information that CRA has given us to the best of my ability. So I will not accept any legal liability if it turns out that what I've said is wrong. Everything is changing so quickly right now. Today is May 1st, 2020, and a lot of what the information is that we've been provided is not strictly clear with examples. And so everyone in the accounting community and bookkeepers as well that I know, we've been struggling to figure out how exactly do we apply the legislation to real life examples and calculations. And that's what I'm going to try to show you today. So this is my free gift to you during COVID-19 pandemic. I just want to offer this information for free to you. You are welcome to share this with someone you know that would benefit from this information. So I'm primarily speaking to people that would be the type of clients that we work with, which is going to be small, independent businesses in Canada. So we do corporate taxes for small businesses. We do personal taxes for sole proprietorships, as well as monthly bookkeeping and payroll for small business. So if I covered every single thing that was going to be applicable to every company, this video would be 3 hours long. So I'm going to try to just focus this information towards people who are running small businesses in Canada, not associated groups, not public companies, not ones where they have holding companies. That's not going to be the majority of people that need this information. And I'd like to speak to the people who need it the most. Okay, and then I also wanted to mention that a lot of people have been commenting on my videos, which is great, and messaging me because I am putting this information out there for free. That being said, I am still primarily a small business owner, just like you probably, and there's a limit to how much time I can put into giving out free advice. So please do not send me a private message. I've been getting quite a lot of private messages from people asking about their specific situation and looking for advice. I just am not going to have the time to respond to a whole bunch of private messages. If you do have a question, it's okay to put a comment on the video, and I will try to answer as many comments as I can. Okay, so before I get into part one, which is how to qualify for the CEWS, 75% wage subsidy. I'll give you a quick bio about myself. My name is Alicia Lowen. I'm the owner of Decimal Accounting, Inc. Decimal is a small home-based accounting firm. We are based on Vancouver Island, British Columbia, but all of our services are online and paperless. So we have clients across the country. Our clients are mostly located in British Columbia, but we also have some in Alberta, Ontario, and Northwest Territories. It's one of my personal and business goals to have at least one customer from every single province. So if you can help me with this goal, if you're somebody, I don't have anybody yet in Saskatchewan, Manitoba, or the Eastern provinces, or all of the Northern Territories. So if you're from one of those places, then maybe you can help me put another pin on my map. And I wanted to let you know that I've been in accounting since 2009. So that's been 11 years now, and I started my company part-time while I was still working. So I got a number of years of work experience in corporate jobs, working for other people. And then after I had my son, Casper, who's now almost 4, then I switched to working full-time in my self-employed business. And since then, I've hired one full-time employee as well. So currently, Decimal is just myself and one full-time bookkeeper, and her name's Katie. And I have my one son, Casper, I wanted to mention, and then my husband and we're expecting our second son at the end of August. I'm currently almost 6 months pregnant. And we also have a farm business. And so that is our second business, and it's primarily what my husband runs. We have a 500-tree apple orchard that we just installed in the fall, and my husband is working on getting the irrigation in for that. But due to the pandemic, we currently have no childcare, probably like you, if you are a business owner trying to work from home. And so that makes things a little bit tricky with a preschooler at home. But we're managing the best we can, and I hope that you are too. Okay, so there's my bio for you. And now I'd like to just get into the meat and potatoes here. I really hope this recording is working. Yeah, it still says it's live here. And okay, I don't know how people do it where they can actually see people's comments at the same time. So that's okay. We'll figure it out. It'll be good enough, right? Okay, so what I want to do for this first part is help you to determine if your business is eligible. So there is a lot of information on the CRA site that I recommend that you go and read through, especially if you are a business owner filling this in yourself, or if you are a bookkeeper for a business and you're not sure what to do. The place to start would be to go through and make sure that you are eligible. Because if you're not eligible, then you don't have to worry about the rest of it. But it is a little bit complex. So on this site here, so if you just search for CEWS, you'll be able to get to this Canada.ca, which has the information about who is going to be eligible. And I'm going to go over some frequently asked questions, but I'm not going to go over every single thing that's on this website. So you should still read it, but I'm just going to pick and choose what I believe to be the most applicable FAQs. So the first thing to determine is if you are an eligible employer. So that is going to be individuals, including trusts. That means sole proprietorship businesses. That's what they mean when they say individuals. Taxable corporations. So a small business like an Inc. or an LTD company is eligible. And then other things that I'm not going to talk about because I don't think they're going to be applicable for people who are watching this. Okay, so you can be a sole proprietor or you can be an incorporated company. That's going to be the majority of small business owners in Canada. And then you have to have reduced income. So there are two different wage subsidy programs. This is the 75% CEWS, and the other one is called temporary wage subsidy, and it's 10%. And you can claim both if you're eligible for both, but they have different criteria. So it's possible that you aren't eligible for this 75% one if you don't have the reduction in your revenue that's required, but you can still get the 10%. So I have a different video about the 10%. If you are looking for information about that, just look through my previous videos and find that one that I've done. So really the most important thing here is that you are showing on your business's financial statements that you have reduced revenue in the current months. So we're looking at March, April, and May. So we don't know if this is going to get extended till June. I think probably not, but things are always changing. And so it's possible, you know, if the pandemic lasts for a really long time, then this might go through later months in the summer. But something that we didn't previously have clarification on, which we do now, is how to calculate this if you are a brand new business or a quickly growing business. And you can choose. So this part right here says you must choose one of these methods to calculate, and then you can't change your method partway through because it'll be more advantageous. So you're either going month over month, so March 2020 compared to March 2019. And for that, you need to have a 15% reduction in your revenue. Or if you are new or quickly growing, you can look at your average of your revenue from January and February and compare that to March 2020. And then if you have enough of a reduction there, then you can use that method. But if that's the method that you choose, then you need to continue that same method with the later months. So then you have to continue to use your average of January, February when you compare it to April. And then same thing again when you compare it to May. You can't flip-flop between methods, okay? And this is the revenue period, and then these are the dates that'll be the payroll dates. Okay, I just gotta make sure I'm following my notes here so I don't forget anything. All right, so if you are a QuickBooks Online user, I'm going to show you, going to walk you through in the sample company of QuickBooks how to find this revenue reduction. Okay, so still says it's sharing my screen, so hopefully you can see this now. So this is a sample company in QuickBooks. At Decimal Accounting, we prefer to use QuickBooks Online. We are certified in this advanced certification. Both myself and Katie have passed the exams and hold those certificates. So I'll show you, if you are a QuickBooks Online user, how to find it. So what I did there is I went through reports, and then first and foremost, you need to have accurate bookkeeping, because if you don't have that, then you're not going to be able to get any reports. So that's what I would do first. If you don't have any bookkeeping done, is make sure that you've reconciled your bank for these months and made sure that it is all good and accurate, or use a professional bookkeeper if you are struggling with this. So what we want to look at is, let's say I was going to do, I'll just put in custom dates here. If I wanted to look at March 2020, so that shows me my profit and loss for March 2020. And this total income is what I'm looking at. Sometimes it's called total sales, total revenue. Those are all just different names for the same thing. And I want to compare it. So in QuickBooks, we have this nice compare feature here. I want to compare it to the previous year. Show me the dollar change and the percent change, and then run that report. So in this case, with this sample company, my income in March 2020 was $10,250, and my previous year was $0. So that's not going to work. Maybe I'm a new company and I wasn't operating in March of 2019. That could be what's going on. So instead of that, what I'll do is I'll look at the January, February and see if that is going to get me a better result. So now I'm looking from January 1st to March 31st. I'm going to display my columns by months. I'm going to take this part off because now I don't need the previous year anymore. Okay, so now I have nothing in January, but I did have sales in February and then in March. So if I was going to take my average of my sales in January, February, I would add these two together and then divide them in half. So I'd get about 7,350, whatever. So I can quickly see that my March revenue is higher than it was previously. So this company does not qualify because they don't meet the requirement that they have reduced revenue of 15%. If this amount was a lot lower, if this was like $4,000 or something, then I could look at that and be like, ah, yes, I used to have over 7,000 average and now I have 4. So I definitely have had at least 15%. And remember to refer back to these rates. And then if I was going to do the next one for this company, if I've chosen January, February average as my calculation method, then I have to follow the same method when I do April. So let's assume that my April bookkeeping is already done. And then when I look at that, now that might actually be, but it has to be 30% lower. And so let me grab my calculator. What I would do, I'm just going to do it quickly here because I don't want this webinar to be 3 hours long. I would do like 5,100 out of whatever it was. And then that's 68%. So is that 30% less than 100? It's 32% with those numbers, for example. I know I didn't do it exactly right, but that's close enough. So then I would be able to get April. And so I'd be able to get the wages that I'm paying out into the next period. So the April one qualifies you for wages that are earned during April 12th to May 9th. If you have employees or even if you're paying them while they're off, I'll get into those details in a minute, then that's based on your April. So you can reassess. So even if you didn't qualify for March, that doesn't necessarily mean that you won't qualify for April or May. So with our clients, we are going to be administering this for them if they're a monthly bookkeeping and payroll client of Decimal. And so every month we will go and reassess. So even if our client didn't have reduced revenue in March, we will check again in April and we will check again in May. Because if it's possible to get that wage subsidy, then we want to make sure that we get it, because it could, for a lot of people, that's potentially thousands of dollars in wage subsidy. Okay, so now I'm going to run through a few frequently asked questions, and then that'll be the end of part 1, and then we're going to move on to part 2 after a 10-minute break. And I confirm that my video recording is all working properly. I don't have to do this first section again. And so then part 2 will be how to actually calculate it. And so I expect that that section might be a little bit longer. So you're going to want a fresh coffee is what I'm saying. Okay, so let me go through the frequently asked questions that I got here. So what is the remuneration? That's kind of a funny word if you are not an accountant or a bookkeeper. I'll just leave my screen there so it's not distracting. So the remuneration is going to be regular wages that you pay to employees, as well as vacation pay, overtime, stat holiday pay. And I wanted to make a note here about bonus amounts, because this is a question that people have asked me. Can we include bonus amounts in the remuneration for both parts of the calculation, the baseline and the current? So I would be very careful about adding bonuses during this time because I think if it is part of the normal way that that person gets paid, like if last year in March or April you paid that person a $2,000 bonus and you're going to do the same thing this year, then if you get audited, you've got a good back history to show, well, this is just part of our normal procedures, especially if that bonus is for yourself as the business owner of the company. I would be very, very careful about doing something like that if it's not historically something that you usually do, because it's going to look like you're just paying out this bonus so that you can get wage subsidy on it. And that's definitely not the purpose of wage subsidy. So I would say as long as it's part of your historical transactions, then that should be fine, but probably you don't have the money to pay a bonus anyways, because if your revenue is reduced, you likely can't afford to be paying out bonuses. So that might not even be an issue. Another question that I've been getting is, can this subsidy be for new employees? So yes, it can, but there is a stipulation here. So you can hire new employees right now and get them on wage subsidy. They won't have the history from January 1st to March 15th. So they won't have the baseline remuneration that's required in the calculations, but you can still get it for them as long as they are an arm's length employee, which leads me to the next question, which is, what is arm's length? This is a term that is used in accounting, but it's not going to be familiar to people who haven't studied that. So arm's length means, if you imagine a visual of putting your arm away from you, someone who is removed from yourself as the business owner. So you are not arm's length from your own company. Your spouse, your children, your family members, anybody who's related to you, or your business partner perhaps, is not arm's length. Arm's length is just someone you are unrelated to that you've hired to fill this position because you have a position open at your company. And so the reason that it's being, that it has this stipulation is because you can't now, if you were not paying yourself a wage previously, you can't now say, oh, well, I'll just hire myself as an employee of my corporation. I'll start paying myself wages and then I'll start getting subsidy. Or I'll hire my spouse, or I'll hire my children. If they weren't working for you before March 15th, then this limit in the subsidy is going to prevent you from claiming wage subsidy. So it's important that you understand that and that you fill that part in correctly on the spreadsheet when you are applying. Something interesting as well, when you are calculating the baseline, severance pay is not included. So if you have laid someone off and had to give them severance, which is also called pay in lieu of notice or termination pay, again, just different names for essentially the same thing. If you've paid someone severance on their final paycheck, that amount for the severance cannot be included in the wage subsidy calculation. So you have to exclude it when you're calculating. Another question that I've received is, can we claim payments to subcontractors under wage subsidy? No, because subcontractors are not your employees. They are other self-employed people that your business has been hiring their business to do work for you. It's not payroll. And I would not recommend that you try to game the system and hire subcontractors on as employees at this point. That's something that I had heard, hopefully people aren't doing, but I understand, you know, people are trying to just find any legal way that they can to claim more wage subsidy. And so that is not a good idea because it would not be a legal method. If someone was a subcontractor previously, either they truly were a subcontractor and they do work for you, they do work for other people, they have their own tools, they set their own hours, they're really running their own business, or they just work for you. They could be part-time, but their relationship between you and them is employer-employee. You don't get to pick and choose whether someone is a subcontractor or not. And I know this is something that a lot of people don't have much clarity on, what is a subcontractor and what is an employee. So read up on that or speak with your bookkeeper or accountant about that, because I would not recommend that you try to change someone's employment status with your company now just to be able to get wage subsidy. I think that there's a high risk that that would be audited. Okay, let's see. How long are we at here? Ooh, 24 minutes already. Okay, well, this first section is going to be pretty long, but I'll just run through the next things and hopefully we'll be done in less than 30. okay, this is an interesting point because someone had asked me if it would be okay for employees to receive CERB if their wages that they were also getting wage subsidy for were under $1,000 per month. So in this scenario, let's say somebody works for you and they used to make more than $1,000 per month, but now you just don't have the hours for them because you just don't have as much work. If you've had to cut their pay down to under $1,000 per month, it's probably okay for that person to be claiming the CERB, the CERB, for $2,000 a month because they're working part-time for you and they're making less than $1,000 a month. And, you know, if they did get laid off previously and they had the period of 14 days that they weren't working, then they might have applied for CERB. And then now you say, okay, I can get you to come back part-time. I think that situation should be fine because I haven't read anything that says that you can't do that. So that's potentially a way that you could make it work. But if you are going to retroactively hire back your employees, because you can actually do that, even if they're not working. What did it say? Okay, oh yeah, right here, retroactively. So like right now, the period is March 15th to April 11th. You could choose to hire back those employees and back pay them for the March 15th to April 11th, even if they weren't working. If you laid them off and now you've got wage subsidy potentially, and so you're like, okay, well, I could hire them back retroactively and issue their pay stubs now for that period. That is okay, because they're saying right here that that is okay to retroactively hire. But you do need to be a little bit careful because they might have to repay their CERB. So that's saying they might have received the CERB already. And if now you're paying their wages and it's higher than this $1,000 a month, then they would be potentially required to repay what they received in CERB. So you might want to evaluate in your situation if someone had already received it, if they're receiving more on CERB than they would from your wages, then it's probably best to just leave them laid off and let them take that CERB payment of the $2,000 a month. We've heard that there will be something on the 2020 T4 slips. There will be a box to report the subsidy for that employee. So you're going to want to make sure that you're keeping really good records for each employee about how much you claimed for that person. And then another question is about if the employees are not working at all, there's an additional rebate that you can get. So if in this scenario where you've hired them back and they haven't been working during this time, but you're going to retroactively pay them, if you're paying them and they're not working at all for you, then not only do you get the wage subsidy, but you can also get a refund of the company CPP and EI that you paid on their paychecks. Normally with paychecks, there's a portion that the company has to contribute. And so that is an expense for your company. So what the government's trying to do here is every dollar that you have then paid out is going to come back to you. So the amount that you've paid for the wages as well as the CPP and EI, it means you're not out of pocket at all if the employees are not working. If they are working, you're going to pay the CPP and EI because that's part of normal paychecks, but you can still get the 75% wage subsidy portion. Okay, another note is that you must make your best efforts to top up the wages to the 100%, but you do not have to. So if your company is in financial distress and all you can afford is the 75% wage subsidy, you can choose to pay employees only the amount that you've received on subsidy instead of 100% of what their normal salary is. And so that's something that the government has said, we want you to do your best to try to top up people's salaries, but if you cannot, then it's better to still have them on payroll because then they will be your employee, and they will be able to come back to work as soon as you're ready to start that again. And you know, in the meantime, they haven't been forced to go out and find a different job because they were laid off from your company. Okay, the application deadline for this is going to be September 30th. So I know everyone is in a bit of a rush probably to get their money, and I understand that for sure. But as you're doing this, don't rush this application. That's why I'm only doing this video today on Friday, because on Monday, there was still a lot of questions about how to actually calculate this. So I've been working on this all week to make sure that I have a good understanding, at least from the information that's available to us currently, about how to apply. So for our clients, we did not start doing applications on Monday because there has been a lot of talk about that there will be penalties for false claims. And so what they've said for the penalty is that if you have made a false claim knowingly, right, and you've tried to do something, manipulate your revenue, or claim someone wasn't arm's length when they actually were, if you've had a false application, you will need to pay back what you received in wage subsidy plus an additional 25% penalty. So that's a pretty high penalty, and that's enough to make me pause and just make sure that we've got the correct understanding here before we move on. We also, okay, so this application deadline is September 30th. So that means you've got until the end of September to apply, and you can even backdate it all the way to this first period of March 15th. So you don't really need to rush to get this done right now. Applications will be open for several months. And we've also heard that the subsidy will not be held against other CRA debts. So some people are worried about, well, I owe some money on my GST account, or I owe some money on my corporate tax. Are they going to hold my subsidy against the other amounts? And they've said no, but they've also said that they'll evaluate it on a case-by-case basis. So I wonder if that means if you're currently owing 100 grand, they might want to hold it. I don't know. But essentially they've said, no, we're not going to hold it automatically against other debts, and we will just release the subsidy to you. First processing is going to be next week, Monday, May 4th, and direct deposit could come through as early as May 7th. So that's why you want to get ready now, perhaps over the weekend or on Monday, with the calculations, which are going to be in part 2 and part 3 of this series. Okay, I think that's good enough for now. I will sign off for part 1 here, and we'll take a 10-minute break, and then we'll come back for part 2, which is going to be how to calculate the CEWS 75% wage subsidy using the CRA spreadsheet.